Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the top plays from Friday. Okay, so these are stocks that finished up nicely on Friday, and have some charts here to look at. The markets were pulling back on Friday, but there were some stocks that were doing well, and so if we look here, EKSO closed up 25%, so that was a really nice move. If you look here, it closed above the 200-day simple moving average. So this is basically was running most of the week last week, Wednesday, Thursday, and Friday. It had a big move on Monday. It pulled back on Tuesday. It had a bounce, and then what happened on Friday is it finally closed above that 200-day simple moving average at 211. So that's the key level to hold on a pullback. You want to see that level turn into support, and so the key level to break now is this high close from back in June, and that's just about 250. You can see it was tested here on the high on Monday and pulled back, and so it got close to testing that level on Friday. And what you need is a break above that, and the next target is going to be the 300-day simple moving average at 288. Notice how that level is lined up with resistance from back in support level back in April, and so that turns into resistance. So this is going to be a tough level to break, this 288 zone. So yeah, keep an eye on EKSO. It has really good volume. It closed above resistance. As long as EMA4 support is holding this pink line currently at 202, the chart is very strong, signaling more upside potential. Okay, let's look at CBIO. Okay, closed up 18% on Friday. If you look here, the Fasto had a big tick down. There was a long upper wick that formed on the candle on Friday. You could see here the share price broke above the blue line, which is the 300-day simple moving average at 745, and it pulled back. And it pulled back into this channel. Notice the top of the current channel is lined up right here with this ascending resistance line, and so it needs to break above that. Yeah, that would signal it wanted to break out higher, and that next level to break is that 300-day simple moving average at 745. If it fails to push higher on Monday and it pulls back, you want to see this red line here, currently at the 200-day simple moving average at $5. You want to see the $5 support level hold. Yeah, that finally just broke. If you notice back here, there was a big run that started here in September, and it ran all the way up to the 200-day simple moving average where it found resistance in October, and it pulled back, and then it held the 100 and 50-day simple moving averages. It formed this really tight triangle pattern here, and then busted out of the top of it on Friday. The long upper wick, it did have bearish divergence on accumulation distribution. Even though the share price was up on the day, you can see there was a spike down in accumulation distribution, and then shaken money flow. Look at the big red histogram bar. So it was a big spike down. That signals dilution. Definitely profit taking, and more likely they were dumping shares. And then if you look down here at the money flow index, you can see it's hitting close to the prior level where it had topped out at in the past. And the same thing with CCI, the commodity channel index. It's very high right now. It's up at 567. Usually when you get up above 400, it starts topping out. You can see here it had topped out in the past at 400, and so up here near 600, it's at very lofty levels. And if you look back here in March, you can see here that was the last time it had a big move. It hit the 300 just like this. It broke above the 200-day simple moving average. It hit the 300. It pulled back and formed a long wick, and then it actually pulled back, and it had a big correction. So the last time that CCI and the money flow index were hitting these levels, and then the money flow index also hit right here, and you could see that was also the long upper wick. And then notice it was a red day the next day. And notice all those days were accompanied with the big volume bars. So you have like the big volume bar, these long upper wick days with the big green volume bar. Each preceding one was followed by a red candle. So you have the white candle, red candle, white candle with the big wick, red candle, big volume bar, and then the same thing here. You have the red candle followed. So the odds are, if the last 3 times that happened, that you're going to see a red candle on on Monday. If a red candle does not form on Monday, that would be a bullish change in trend. And if it broke above the top of that channel, that would be a very strong move. And it would be breaking this multi-month pattern. That's what the bulls want to see. The odds are, though, that a red candle will form. The bright side is you have the MACD just crossed over on the 12, 26, and 9, and there's a crossover on the 8, 13, and 5. So it does signal the start of a new uptrend. You just want to see if it does pull back that 280 moving average hold, and then make that move back up to the 300-day simple moving average. Okay, let's look at NWBO. Okay, so this stock was alerted on Thursday on the break above the 50-day simple moving average. That's the green line here at 17.2. So that was a nice technical move above resistance. And back here in September, it had closed above that level and it pulled back. And so we were looking for a break above the gold line, the 100 simple moving average at 18.8, and it did break that level on Friday, and it ran all the way up to the next target, which was the 200-day simple moving average, currently at 219. And so it also hit the high close resistance level. They both happen to be at the exact same level, and so this is the September 19th close, and the 200-day simple moving average are both basically at 22. That's the they're at the same level, and so it needs to break above that. If it can get above that next week, then it could possibly, make a move up here to this high close in June and the 300-day simple moving average. Those would be the next big targets. There's going to be some resistance here at 24.5. But the big thing to do is to break above 22. If it fails to break above 22 and it pulls back, you want to see that 100-day simple moving average turn into support. And then let's look at AMRS. Okay, so this stock, it's been heating up here. It still has, at 62, it has room to run until the 70 overbought level on RSI. There was a bullish crossover on ADX with the green line, plus DI crossing the red line, ADX to the upside. The ADX down here, the black line, it needs to cross above the red line for the chart to signal, that it's strong and bullish. And so it's heating up. What's going on, it has this symmetrical triangle pattern. Notice you have descending resistance and you have ascending support, and the candles are working their way into what's called a flex point, where either resistance is going to break or support's going to break. This pattern is going to end soon. It's coming close to an end, and so a break above this 375 level, which is lining up with the high close here in September, is going to signal it wants to head higher. Then it's going to have to break the high close from July, which is around 415 or so, and then the next target's going to be the 200-day simple moving average at 475. If you can get above that, there is a gap back here in May. Okay, and so there's a gap between this is the top of the gap, the bottom of this candle, and then the bottom of the gap is the top of this candle, and so the bottom of the gap is currently at about 575. So if it gets above the 200-day simple moving average, always remember the bottom of the gap level is always a really strong resistance level. It's always a tough level to break, and so many times it's a level to lock in gains. And so yeah, let's see here. So if it breaks down to the downside, what has to happen here, it has to hold this 50 and 100-day simple moving average and the middle Bollinger Band. They're all at the same level here between, they're at 318 and 326, and so it needs to hold that level. If it breaks, if you see it drop below the green line, that's going to signal downside risk. Notice there was a big volume spike on Friday, and then check out how MACD on the 12, 26, and 9 and the 8, 13, and 5 have both just started bullish crossovers. So this could be signaling the start of a new run. There was also a parabolic SAR bullish flip. The green dots are now below the candles. So it just has to break above this 375 resistance zone to head higher. Okay, let's look at IPDN. Okay, so yeah, this stock, it had a really nice 3-day run last week. When the long upper wicks form, it's always, it always signals caution. And so when the candle formed on Wednesday with the long upper wick, we still put out the alert because it closed above the middle Bollinger Band, but we weren't stoked that it had pulled back so hard from the 150-day simple moving averages. But it did follow through on Thursday, and it closed above the 50-day simple moving average. And when that happens, that many times signals more upside potential. What we are worried about is it pulling back, like back here in August. You can see it closed above the green line, which is the 50-day simple moving average, and it immediately pulled back. It did that in September as well. Even when it got back above on the 11th, it pulled immediately back below. And so there was a bullish change in trend last week. It closed above the 100-day simple moving average, and it pushed higher. So that was a change in trend from the previous trend of dropping below. So it still failed to get above the 100-day simple moving average. It broke it intraday, but this long upper wick formed. I didn't put in accumulation, distribution, and shaken money flow on this chart, but if I did, you would see the big spike down as well on both of those indicators, signaling dilution. And you know, definitely there's been a lot of profit taking and yeah, shares being sold. Notice there was the big volume spike. You know, this has the whole climax spike look to it. If it pulls back, you want to see this 50-day simple moving average hold. Notice the candle, real candle body is floating above the upper Bollinger Band. There's a space between the upper Bollinger Band at 381 and the bottom of the candle. And so many times when that happens, the candles work back into the bands. If that does happen, it needs to stay above that 370, 369 level of the 50-day simple moving average. If not, it could pull back and test this middle Bollinger Band. So once they get above the 50-day simple moving average, you want to see it stay above that level. A close above the 100-day simple moving average, that's going to signal a potential run up here to the 200 and 300-day simple moving averages. Those are the targets. Notice they're lined up now with the high close here in August and this big support level back in July. So yeah, keep an eye on IPDN next week. And then EBIO. Okay, so now this is a stock that is setting up. Yeah, this is the 15-minute chart. I want to show you the daily chart first, and as you can see here, the RSI and FASTO on the daily chart are both coming above oversold levels. So notice how for a couple weeks there they were below the oversold level. 30s oversold on RSI, 20s oversold on FASTO, and they both closed above on Friday. And then you've got the big uptick on plus DI, and then you've got minus DI ticking down. And so basically what happened was there was a close above EMAs 4 and 8. Notice how the support broke back here back here in October. And then they started riding the pink and lime lines lower, and so it had really been riding EMA 4 really strong for multiple weeks. And then on Friday there was finally a close above both levels. You know, they put out their financials, and it looks like the dilution could be done for a minute. That's what they're saying in their financials. I recommend everybody reading it, but yeah, it looks like maybe the dilution faucet's going to be turned off for a minute, and if that's the case, maybe it could push higher next week, so keep an eye on it. It closed right at EMA 13 at 76. If it can get above 76, then it could run up here to the middle Bollinger Band at 85. It has to get above that level to get an uptrend going. And then we have our eye on this gap. There's a gap between these two candles, and so you could see the share price come up and fill that gap. So keep an eye on it. There was a giant volume spike, and there was a PSAR bull flip. Notice that the green dot is below the candles. The dots had been above the candles since back here, all the way back here in September. And so when the chart broke down, the dots flipped above the candles, and so this is the first bullish flip since that time. And so that's another signal that SAR stands for stop and reverse. So it's signaling a possible that the downtrend's possibly stopping, and then a new uptrend could be beginning. And then if you look at the 12, 26, and 9 MACD, it had a bullish crossover on Friday. So that's also signaling the possible start of a new uptrend. And then the 8, 13, and 5 had already crossed over. If you look at the 15-minute chart, it made a really bullish move. It had the classic break above the moving averages. You could see it had the tight moving averages on Thursday, you know, and then it started breaking above. The close above the 50 and the 100 simple moving average and the middle Bollinger Band on Friday actually put it in play, or on Thursday put it in play, and then Friday it got above the 200 simple moving average. That was a signal that it was following through. The candles were riding EMA 4, so it was in play early on Friday and actually was heated up on Thursday. And then finally the break above the 300 simple moving average at 11:45. That was your big signal that it was ready to that it was ready to really make a bullish move. And now it needs to stay above that level. That's all the way down here at 70. If it drops below that with the 50 simple moving average crossing over, then that would signal the chart is broken. It has to stay above that level. Currently, the key level to hold is the middle Bollinger Band. It closed right at that level, currently at 74. So we want to see at that level hold and then break above 775. Actually now 78. If you look here, yeah, 78 cents is now the big level to break. Yeah, right there. And so if it can break above 78, that's going to signal it wants to head higher. And then you have 80 was the high on Friday, and that'll be a key level to break as well. Okay, so another kind of a similar chart is CIE. Notice though it's still below 30 on RSI, and it's still below 20 on FASTO. It did have a crossover, so this chart is still very bearish. It has this really nasty downtrend going. Notice how the candles are below the dotted purple line, which is the middle Bollinger Band, and they're riding the pink and lime line lower. So, this is a really great chart if you're short, but if you're long, you're just hating it and you're waiting for the bounce, or if you've been a bounce player and you've been looking, when do I get in? Okay, so this is signaling the chart is heating up. EMA 4 at 42. It has to stay above that level. If it closes below the 42 next week, that's going to signal that it's a risk to hold. You don't want to hold it overnight if it's forming candles below EMA 4. It has to stay above that level. And then the next key level to break is EMA 8 at 47. If you see it close above that level, that's going to be a signal the chart's heating up. It's been failing to get above EMA 8. And so it's been running up to that level, failing to break it. So that would be a bullish change in trend if it could close above. And then the big level to get back to is up here at the 50 or the middle Bollinger Band at 70 cents. That's lining up with the high close on November 6th. So yeah, we're just going to see if this can follow through and stay above EMA 4 next week. There was some big volume in November. So we'll see if people were loading or if this is just going to continue the downtrend lower. Okay, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis. Thank you.